Good evening, everybody. It's Sunday, November the 13th. After a wild week in the markets, lots of positive euphoria after inflation numbers came in better than expected. But let's talk about what this could actually mean for the markets going forward and what to look for. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview. All right, everybody. So first things first, welcome back to the channel. I really hope you like today's content. And whether you do or you don't, comment down below. I'd love to hear what you have to say about the market and why. But let's jump in, because last week the markets were absolutely euphoric with CPI numbers coming in significantly better than the previous reporting and better than expected. Now, I wouldn't get the party hats out yet, because the inflationary numbers are still sitting at 7.7%. And let's be honest, it's probably going to go back up, especially with energy costs going up this winter as anticipated. And in fact, we saw crude move up quite significantly over the last few days. Now, that being said, keep in mind, when you're looking at the markets are no longer trading on actual numbers. Let's be honest. If they were, the economic numbers alone would keep the markets absolutely decimated. Oh, no. Instead, we're really trading now on sentiment. And let's take a look at what I mean, because everybody's trading on the fact that now that inflation has, quote unquote, peaked, although we can comfortably say it probably hasn't. It's really the Fed's commentary that is keeping the markets in the green. Most people believing that it's going to be a little bit more moderate rather than hawkish. Now, in truth, I'm probably on board with that. I do anticipate some degree of moderation here. I probably wouldn't be surprised if I saw a 50 basis point increase as opposed to the 75 we've been seeing at the next raise. But at the same time, I'm not entirely bullish here. You see, JP Morgan and UBS's hedge fund departments are also believing that the markets, or at least price pressures, will continue for quite some time. And in fact, if we take a look at an article on Reuters, just the title alone is enough. Fed's Waller may cut size of hikes, but not softening fight against inflation. Well, let's be honest. Your little increases here, as we've talked about a million times, are not helping with inflation. In fact, are making them worse. But really doesn't matter what the interest rate number is, because although it hurts your pocket, when we're talking specifically about the economy overall and inflation in particular, it's not doing anything. It's only hurting the average Joe. Not only that, we have a major issue. And the issue is a currency issue, not an interest rate issue. The issue is a liquidity issue, not an interest rate issue. The issue is a debt market issue, not an interest rate issue. And I'm talking specifically about the markets here. You see, what we've seen over the last week, and even longer now, actually for quite some time, is extreme volatility in the debt market. In particular, I like to follow the 10-year yield, which on Thursday, I believe, alone, we saw a 5% move to the downside, which is absolutely mind-blowing. As a result of that instability to the downside, we saw the markets move to the upside, and that was the day of the CPI reporting. So partially expected, but to see that level of a move in the 10-year yield is actually kind of frightening. You see, the debt market is supposed to be stable. Now, we know that the equities market is essentially a derivative of the debt market. So when we see that volatility in the debt market, you can be pretty damn sure you're going to see that over in the equities market. And that's exactly what we're seeing. What makes it even more concerning is on Friday, we really should have seen a follow-through of some positive momentum to the upside to at least help confirm some momentum carrying forward. We didn't get that. The markets ended up very, very flat. And in fact, even if we take a look at futures markets now, which have opened, the US 30 is currently down about 85 points already. Now, does that mean it's going to be that way when the markets open tomorrow? Probably not. And keep an eye for my short, which I'll do a market preview probably about half an hour to an hour before the market bell. But if it does continue, then I think that's a confirmation to the fact that we are not going to see a continued positive momentum here. And we're not going to see some kind of bullish sentiment like we saw midsummer, where the markets did move quite significantly to the upside before pulling back down. And if we do see something here, we're probably going to see that. We're going to see a little bit of a run to the upside before markets pull back down. You see, some people, and I'm in this camp, believe that we can still go 20% from here to the downside. Some are even saying significantly more. I've heard as much as 85% from the peak. I don't know if I'm going to go that far, but the truth of the matter is we don't know where the bottom is. And if we're trading strictly on sentiment, well, whatever they tell us will essentially manipulate the market. If the Fed comes out today and says, you know what, we're stopping interest rates entirely and we're going to pivot, move to money printing, I can pretty well tell you the markets are going to go euphoric, expect all-time highs. Now, I do expect a pivot of some degree and almost a complete stop of interest rates. I'm probably going to say somewhere in the middle to late of first quarter. But that poses a whole bunch of other problems. Because money printing, as we know, is inflationary in itself. The economy is in absolute collapse and free fall everywhere you look, not just in the US, not just here in Canada, everywhere you look. Inflation is going to continue to roll out of control, especially when we start seeing commodities and their price actions take effect. Never mind whatever else happens from a geopolitical standpoint, whether it's continued conflicts overseas. Who knows? But at the end of the day, I'm going to say this. Keep your eye on that 10-year yield. And that's what I'm going to suggest for next week and how we can monitor and where we can position ourselves for next week. Keep an eye on the 10-year yield. Keep an eye on the US dollar. If we see, again, continued volatility, then we know that there's going to be continued volatility in the equities market. Now, what do I see going forward? I think we're probably going to see some negativity next week. I don't know if we're going to see a return of all the gains that we saw at the end of the week last week, but I do anticipate that we are going to see some down pressure. We've got to give some of it back. That was significantly euphoric. That was very, very, very aggressive. I don't think, even if we take a look at all price action here, I don't think that that's warranted. I still think that everything is significantly overvalued. So just keep that in mind. I do anticipate some downside pressure here. Might not return all the gains, but definitely some negatives. Let's jump over to commodities, because I do anticipate gold and silver will continue to see some positive momentum. Whether it's significant this coming week, I'm not too sure. But you see, there's a lot of positives going on for the precious metals, both domestically and abroad. You see, what we're starting to see is a net positive by the bullion banks in terms of their positioning. That is a very significant and indicative sentiment for the precious metals and where they might go in the future. When we start to see the bullion banks turn positive, that's very, very telling. So I myself am a big believer in the metals. And in fact, I tend to purchase and hold my precious metals. I do not buy paper metal. Would love to see that happen. In fact, I wish it would pull back a little bit more, which very likely could happen. We could see a little bit of a pullback here for the short term, just as people continue with some kind of euphoric momentum. But I do anticipate, if it does go back, that I would be backing up the truck and buying some more before we transition into that bull market. Now, where I am concerned, however, are for those that are holding cryptocurrencies looking forward, as FTX has filed for bankruptcy. Investigations continue in the Bahamas. We can see Bitcoin currently just sitting over 16,000. Could it go below? Absolutely. It can go as low as even 12. And that is concerning for those, because so many people really don't understand the crypto market in general. Now, we've seen a very significant outflow of cryptocurrencies in general. I'm not going to get into that and get into the flow of monetary or money out of crypto. But what I will say is this. It just reminds me of Mt. Gox. If for those of you that remember when Bitcoin was still in its infancy, relative infancy, and I believe at the time we were sitting around 11, maybe as high as 1,500 at the time. It ended up collapsing and pulling all the way back down with the collapse of Mt. Gox. And for those of you that don't know, that was an early exchange, plagued with a lot of issues, and the entire exchange ended up going under. And the markets ended up pulling all the way back, collapsing essentially cryptocurrencies. And I had just purchased my first Bitcoin at that time for about $250. I would probably say about a year and a half prior to. But anyways, I do expect cryptocurrencies, and especially the big ones, to hold on here, while many of the smaller, more volatile ones will continue to see significant downside pressure. I am not bullish at all. I haven't been bullish on cryptocurrency since it was about 40. I still hold most of my positions. I'm not panicking, but I do believe that for those of you that are holding crypto, there's still going to be a little bit more pain coming down the road. But going back to the markets should be under a little bit of pressure. We're probably going to see a mixed market throughout the week. We do have a busy week later on, so we could see some momentum one way or the other from that. But keep an eye, especially on that 10-year yield. This is a long enough video. I have other things to say, but I'm not going to say them tomorrow morning. I'll see you at the opening bell or just prior to for my market preview.